August the 7th, 2025, and these are the SPY charts here. So as you can see, SPY went down in put territory today. And so today when I entered at the pretty much the high of this 930 candle, and I set my stop loss above these wicks. As you can see, it was a little bit of consolidation going on here, and then we had this big drop down. Now this candle here is where I set a tentative stop loss, not stop loss, but take profit, because that means price was trying to go on down. So as you can see, it paid really well. It went down into put categories. That was pretty deep. And I will say is profit today was 151. There was a 70 $57 loss in that, unnecessary, trying to, I thought it was another break going the other direction, because the overall market is bullish. So I was being very careful on taking shorts because of the fact that the overall market was bullish. But it kind of moved around. As you can see, this is an indecisive candle. Indecisive, when you have like where the body is pretty small and almost in the middle of the long wick stem here. And then we had a powerful boost up right here. And so that was more than likely could have been a fake out hammer. But as you see, it went up here. It didn't get close to our stop loss. Well, it got a little close, but it just reversed and went on down. So it took me out of that trade, but we still were up in profit overall, $94 on that one. This is a swing trade that's set to expire in January, and it's down right now, but I'm not really worried about that one. BBAI is that one. So basically, one thing that I picked up on is I got out of this trade a little bit prematurely. I look at the 5 minute, which is this chart, and the 1 minute, which is this chart. And so if you're exiting a trade on the 1 minute, the exit is going to be extremely aggressive, and it may not be a proper sign to get out of the trade. And what I did, it was actually this pullback, which ended up being a bear flag. A bear flag is basically where it goes down and then it kind of pulls back because it's trying to release the pressure. And so as it released the pressure, it dropped on down more. So what my plan of attack is next time is that when it does like a pullback here, I'm gonna be ready to add another position here for the rejection of that 9. The blue line is the 9, and the yellow line is the 20 EMA, and this purple line is the VWAP. As you see, VWAP is very strong above that, which is letting you know that you got a strong trend. It's not entangled in it; it's actively up and away. And so another little method I was looking at, in addition to, so I can not be so risky on my trades, it's like a 2 candle break on the 5, like the initial break on the 1 minute, 2 active candles breaking to either side of the blue line or the 9. And then once I see the 2 on the 1 minute coming up to confirm the 2 break here. So let's say if I miss that initial candle open, which is here, which that opening is very risky, especially when you're new like me. I've been studying how that market moves right at opening. So I know some things just by looking at it on a daily basis and studying what it does. But it is quite a risk to enter right here, especially when it does like did yesterday, and there was a choppy market, and we're gonna get to that as well. So I got in here, but let's say I wanted to do something less, wanted to be very, very sure. I could have waited until this active breakdown and close here, and then the second breakdown and close here, and then enter right here on this candle and just let it go down. And then I could have added another position here and then brought my my stop loss here. So both stop losses will be about this area, and then as it goes ahead and falls down, possibly adding another if you want, or if I chose to add another one on the pullback. So those pullbacks are very powerful. Typically, it's when the market goes into an oversold or a overbought territory. It needs to relieve the pressure. Even if it's wanting to continue down, it has to relieve the pressure. So when you see it's heavy and put over here in the RSI is really dipping down and oversold, get ready. It's possibly a pullback that's going to come. Like we had another one here. Now at this one, I probably would have gotten out right here, or I would have been ready. Once that closed, I would have moved that stop loss here. And of course, if it had gone back up, I would have been out. But these are it once it breaks this or goes back above that close, I want to be out. And not to mention, if I'm already here on a stop loss in this area right here, if I've moved down in profit here, I definitely want to be out if it pulls back against that particular move. So I got out with the 1 minute, which is why I didn't get the profits I could have gotten. So I got out about it was about here. And as you see, we had this all the way down from 633 roughly on down to 631 now. Now sweet spot is the 627 and 628 areas. And as you see, I marked some things out, and to mark those areas that you see I marked out here, I just simply went back and kind of saw where we had a little bit of liquidity and individuals where we kind of had a boost up here. So this seems to be a liquidity zone. So I set my take there. But I mean, you see a little consolidation, but it may keep going. This is like the do or die. We're gonna find out what it does at this point here. So going back to yesterday, I made a video and had some issues with the computer. So that's why I couldn't get that back over. But this is the danger zone I'm talking about that could happen, or you run up against opening, coming in on that market open. People wait the first 15 minutes, some wait the first 30 minutes, and some wait the first hour before doing anything in the market. And I think that those are very smart um, things to do. I have a small account, so I try to make the move work for me. And like yesterday, there was $190 loss. I'm just like, there was no, the only way against that would have been just simply holding out once I saw that it started chopping around. But in order to know it's chopping around, you would have had to wait at least the first 5 candles where you see it's typically still trading in orb. And I use orb as a little indicator to kind of help me gauge things. But as you see here, this purple, green, purple, that is the opening range break. I do mine based off the 915 so I can kind of catch what's happening across the board. Some people do theirs on the first 15 minutes, which would be the high and low of this candle that opened at 930, which it was still the same thing with the consolidation all in orb. No movement outside of orb. So of course I didn't give it enough time, and it cut me up like a knife right in here. And then we got here to this rejection of the what was that? That was the low previous. I think that was the market low, maybe. Uh, I don't. I don't know what that low was. Yeah, it did have some significance. I think it was the previous day low on here. Um, but as you see, it really hurt really badly. Uh, Yeah, it was a little bit, it was close to that pre-market. So that was a hot zone, as I said earlier. The 628 to 627 area I was just speaking of, as you see in multiple taps and manipulation in that area. So yeah, that's what happened yesterday. And so lesson learned, what I'm implementing now, because I do have a smaller account. I'm doing the break of the EMAs, which I use the EMAs to follow my trends so that I can catch as much of the move as possible. So as you see here, it went in, one candle closed above that 9, second candle closed above that 9, great entry here, stop loss maybe give or take around here. Also, some people may have done the stop loss here from when the move started, or towards the bottom of the 20, just in case it goes back to test the 20. um, but as you see, it went up pretty strong. And based on that, these are uh, calls. I bought. I didn't buy calls. I was sold. I had to watch it happen, but I learned a lot from it because you see it came out here. And if you're not doing an aggressive stop or an aggressive take profit, you have an option to have seen this here and maybe move your take profit or moved up your stop loss to about this area, knowing that, hey, this one borderline, but it did close there. This one shot up, kept continuing. So I already knew once that market was doing what it was doing, I was trying to catch that move and got wicked out. So it ended up hitting that. Uh, I think that was a previous day high. Yeah, that was a previous day high that I already knew that it was going to roll towards. So, of course, the pre markets and the previous day high and lows are magnets for where price would go. And then once it hits those initial magnets, I mean, you just have to follow to see how far down it goes, or if it reverses, when it will reverse. It says a lot of times the pullbacks typically happen in 30-minute increments, give or take. So about, let's say if you were start getting in the market about an hour after it's already opening, you see the pullback coming right here. That's an entry. That was an entry to get in for calls and ride it out until the next day even. I don't carry, I do 0 day trades. I do 1 day and 0 day trades. That just means that my expiration expires the day of a purchase. And sometimes I do 1 day as well. So those do pretty well. And my account has been just, kind of, I've been consolidating stagnant. So just trying to work on discipline, and then implementing um, getting out. Instead of getting out aggressively based on a 1 minute, I will be getting out based on a close below the 9, especially for a large, a big trend. Now, some people get out a close below the 20. As you see, you get a little bit more movement there. Hey, that's a close right there, but then the next one pops back up. But as you see, you still get a great amount of profit getting out at the 9 close below, because it could go back and test the 20, but then it could be ready to end the trend. So that's pretty much it. That was 2 days worth of information for today. So we live the trade another day.